Hey guys, hope you and your families are doing well. Quick video for you on how you can better identify the leading stocks within specific groups or specific themes of the market. So I want to give you a couple of practical tips that you can take away and apply to your own screening and scanning so you can help better identify those leading stocks in specific groups or specific themes. So we're going to be taking a look at AEM, which is a precious metal miner that I was targeting on the 30th of July 2024, and we've got it overlaid versus GDX, which is the gold miner ETF. So you can see here, as per the session insights, Jack's 30th of July session plan targeting AEM, the pivot being 74.55. So I'll take you through the rationale of why was I looking to target AEM on the 30th of July session. Before we get into it, let you know that Market Surge are today's video sponsor. They are my go-to resource for analyzing company fundamentals. If you're interested in a discounted trial, then you'll find a link to that in the description and the comment section below. Okay guys, let's get into the video. So the main concept here is going to be relative strength. Now before you roll your eyes and you go, I've heard about relative strength 101 times, not another video on relative strength. Number one, it's really important, and then I'm going to give you two very key concepts to take away and apply to your own screening and scanning. So what are those two key concepts? They're going to be number one, thinking about relative strength from a structural perspective, and then number two, thinking about relative strength from a key moving average perspective. So let's start with the structural perspective. What we've got here is we've got AEM, which is a precious metal miner, overlaid versus GDX, which is the main gold miner ETF. So this is the most applicable group theme ETF for me to be using when I'm analyzing AEM and going, is this one of the strongest stocks within this group that is showing relative strength versus the market? Because what I'm about to teach you, thinking about the stock versus the group ETF, is also applicable analyzing the group ETF versus the major indexes. So ideally, you're trying to find leading areas of the market by applying principles that I'm teaching you in this video, and then you're trying to go a step further and then find those leading stocks within those leading areas of the market. So let's start with the structural perspective. So what have I done here? Well, you can see that there's a nice uptrend in May of 2024. So I've just marked the high and marked the low of the bar and used this blue zone just to help illustrate the point. So we've done that for AEM and we've done that for GDX as well. So here is structural strength. What do we see AEM do? When AEM is pulling back down, so I'm actually just going to make this area in here, say orange, okay? When AEM is then pulling back down and potentially setting up, what do you notice? Well, it's been able to move through that high in May, and then it's pulled back down and it's been able to hold above it. It also held its 21-day EMA, which we'll come on to in a couple of moments time. But see here, from a structural standpoint, it's been able to break out through the prior resistance and then hold above it as support. So this is a key concept in technical analysis and relative strength also, if the principle is being applied, whereby you see relative strength in the stock versus, say, the group ETF or the major indexes. So what's happened here with AEM, it's made a higher high and then a higher low, and it's been able to hold the previous resistance now as support. So the previous resistance, being this blue zone in here, is now holding as support. So it's made a higher high, here's the higher high, then the higher low. If we contrast that with GDX, which is the group ETF that we want to be monitoring to go, okay, AEM is setting up, it's a nice shakeout demand tail around the 10-day EMA, the volume is really dried up, but is it one of the leaders? Let's take a look at GDX. So this is representative of the group, kind of the bucket of gold miners. So what's the average gold miner done? Well, it was able to make a higher high versus this May high, but then it pulled in, and note how actually it's gone below the low of that 20th of May candlestick. It's actually gone below the low of that 20th of May candlestick, and it's kind of holding around the 21-day May, but it's lost that. So rather than pull back in and hold above, it's actually made a lower low. It actually in here makes a lower high then a lower low, whereas AEM is much stronger during this time period because it's able to hold above this quite important high. So you could also then look at this as kind of like a cup and a handle type pattern forming there for AEM and a cup and a handle type pattern forming for GDX, but note how there's this deeper pullback for GDX. So what is this indicating? Well, it's on the pullbacks where we really get to see the strength of stocks. Are institutions willing to support the stock, or will they let it go quite easily? So if you look at this here, thinking about AEM relative to GDX, institutions don't want to let it go that easily. Now we bring in the second concept, which is thinking about relative strength from a moving average perspective. What do we notice with GDX on this pullback? I'm just going to make this zone in here orange as well. What do we notice with GDX? Well, does it hold the blue line, which is the 21-day EMA, like AEM does? AEM pulls back, holds its 21-day EMA. Pretty textbook, kind of bounces off of it, right? Whereas what does GDX do? It doesn't hold. It actually just kind of gaps down through it and just closes with this little doji candlestick in between its 21-day EMA and its 50-day. And then it kind of tightens up, but it's underneath the 21-day EMA, whereas the action of AEM is holding above the 21-day EMA. So not only do we have relative strength from a key moving average perspective, where AEM is holding and where GDX is not holding, we also have it from a structural perspective, where the previous resistance is now holding as support. It doesn't undercut it like GDX does. So this can help you dial in and kind of pinpoint those leading stocks within leading areas. So ideally you want to conduct the same analysis. You want to look at, say, GDX versus the Qs or the S&P 500 to get a feel for the major indexes. Then is GDX, which it is GDX showing strength versus those major US indexes? And then if it is, how do you then go about trying to identify the leading stocks, the 1, 2, 3, 4 leading stocks within that group that you identify has shown a lot of leadership, has shown a lot of relative strength? This is the way to go about it. Okay, you can then bring in fundamentals as well. Does the company have triple-digit earnings, triple-digit sales? Everything that O'Neill taught you in his book, How to Make Money in Stocks. But from a technical perspective and a relative strength perspective, which is so important, because relative strength, it's not your opinion, it's not my opinion, it's the opinion of the market. And when stocks pull back, that is when we get to see, where are the institutions? Are they supporting the stock? Are they not supporting the stock? Which stocks do they favor? Which are the ones they don't want to let up easily? So that is it, guys. I'll wrap it up there. Hopefully a couple of useful points that you can take across into your own screening, into your own scanning. So thinking about relative strength, to summarize, thinking about relative strength from a structural perspective, but also thinking about it from a key moving average perspective as well. So thank you very much for watching. I look forward to seeing you in a future video.